AMC stock is breaking out here today, up about 6% at the time of recording this video, breaking out above that 50-day moving average, as well as testing that 100-day moving average literally right now. That 100-day moving average sits at $5.57 per share. AMC is 1 penny under that at $5. Now it's at $5.57 per share. If you get a break above these two moving averages, guys, things are going to get a lot more explosive from here. And you do have some breaking news today that I want to go over with you guys. And AMC made another acquisition, or at least a partial acquisition, in a fellow media business. We're going to talk about this. We're going to go over the Ortex data and a deeper look at the technicals, because AMC keeps going, now above that 100-day moving average by about 3 cents, hitting that $5.60 mark right now. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section to stay up to date with the latest that is happening with AMC stock. And if you guys also want to come trade with me live in real time, join the trading community, get access to the latest trade that was just put out. Yes, it is a high risk, high reward kind of trade, but nonetheless, that is not financial advice. And I do think it's well worthy of one of those high risk, high reward kind of trades for this week, considering the lineup of catalysts we have throughout the rest of this week. Ladies and gentlemen, link down for that in the description of this video. Let's get into what is happening with AMC stock right now. So this article just came out. It says National Sin Media stock rockets after AMC discloses more than a 9% stake. Shares of National Sin Media Inc. Ticker is NCMI, trades for about 21 cents right now, up 58.5% on the day, with about 90 million shares that have currently traded hands today alone in that name. It says, has more than doubled in a very active trading day after AMC Entertainment disclosed that they now own 16.58 million National Sin Media shares, or 9.1% of the shares outstanding. This would make AMC the second largest, shareholder behind fellow movie theater operator Cinemark Holdings, which disclosed a week earlier that they owned about 48.5 million shares, or 27.4% of the shares outstanding. And it says National Sin Media stock rocketed 116.5% on volume of 15.2 million shares ahead of the open, which compares with the full day trading volume of about 5.2 million shares on average. Now, the company, Sin Media, has filed for a delay in filing its annual report as it is engaged with certain lenders, and as those discussions have had a material impact on its disclosures. The company said in its latest quarterly filing in November that there was, quote, substantial doubt about its ability to continue as a going concern. National Sin Media stock has plunged 56% over the past 3 months, while the S&P 500 has gained 3.5%. This is very weird because it looks like this company is literally about to go bankrupt, and AMC stock is swooping in and buying a bunch of shares. Either they know something, hopefully they know something, and it's just a really good deal and they're going to make a lot of money on this, or hopefully they're doing their due diligence there. But nonetheless, it's seen as a positive thing today. AMC stock is going up off of this news, and I think it furthermore highlights the fact that we've talked about here for a while now. If AMC is going out and actively buying 10% stakes in other companies, what business do they have diluting AMC common shareholders by 80, 85, 90, 95%? I think a judge is not going to like that, considering AMC is not going bankrupt. They have capital to go out and make acquisitions. Even if they're relatively cheap acquisitions, they're still going out and doing that. So I think this on top of whatever fundamental value could be added by this trade, it does continue to support that maybe the judge does not let this go through. And I think that is ultimately still the biggest thing that is going to affect AMC. And I think over the past couple of days, AMC stock rallying about 40% is proof in and of itself that maybe shorts are too far over their head in this short trade, because after all, as we reported in the last video, AMC's cost to borrow rates are not even in this world anymore. They're out of this world, and they're remaining very elevated, sitting at about 842% from interactive brokers and about 1,030% on the cost to borrow max. AMC stock continuing higher right now to $5.62 per share, up over 7% on the day so far, continuing this multi-day winning streak that we have been seeing. Now, I'll tell you guys, it's been very weird. And I don't know what's been happening over the last couple of minutes, but really when the market started to sell off here and you got these red candles, that's when AMC stock really started to take off. And there's been a pretty good correlation here between the markets going down and AMC going higher. If that correlation remains true, well, tomorrow you're going to get CPI that comes out, and that's not expected to be a good thing. If CPI comes out and it's bad, and if the markets fall, if that correlation that you have been seeing, that inverse correlation between AMC and the S&P 500 continues, well, that could mean another substantial green day tomorrow for AMC. Although if people come to the conclusion now that technology and the markets are overvalued, inflation remains too high, and the Fed's going to have to raise rates higher and keep them there for longer, maybe everything takes a hit. But right here and right now, it looks like AMC is benefiting from the NASDAQ being down about 0.5% today. And it's been just a very strong last hour or so here for AMC. So I did want to report that for you guys here in this video. On top of that, I want to take a look at this article. It says AMC and APE, an obvious arbitrage play. Why investors should be careful. It says many traders are exploiting the price discrepancy between AMC common shares and AMC preferred equity APE units, but there are risks to this strategy. Arbitrage traders who go long one security while shorting another are seeking to capitalize on this price variance, betting that eventually the two will be worth the same amount. This has especially become the case for shareholders after shareholders approve the conversion of APEs to common shares. However, considering the high volatility in AMC shares, there is some serious potential risk for those who think that this arbitrage trade is a guaranteed success. What I've been pointing out here, everyone's betting this is a guaranteed success, does not look like it. Like, I mean, you gotta be tunnel vision here to think that this is a guaranteed success, especially after the judge has not lifted the status quo order. That is telling you this is not clean cut. This is not going to be an April 27th. Here we go into it. The stock sells off 20% like it did on March 14th. I don't think that is going to be the case. I think there's going to be, one, a bullish reaction, but I think there's going to be more steps to this. I don't think it's going to be, like I said, clean cut. Now, what does the street continue on to say? What is the APE/AMC arbitrage strategy? And we went over that, and they say it does make sense, right, to play the difference in these two names if it was not AMC. If it was not AMC, because AMC is far too volatile for this kind of trading strategy, especially again with what we have seen recently. Now, it says, why is APE going up and AMC going down? It goes on to say that the Allegheny County Employees Retirement System argued that the conversion of the APEs would dilute AMC common shares, hurting AMC shareholders. As part of the settlement, all common shareholders will receive one additional share of AMC stock for every 7.5 that they currently hold. In theory, this settlement would have opened the way for AMC's management to proceed with the conversion of the APEs, which will result in the company getting additional capital. This news caused APE shares to skyrocket while AMC shares plummeted. This is probably just a correction of the shares' reaction to the initial news of the lawsuit, which sent Ape shares plummeting while AMC soared. It says Eric Wold believed that it made sense for apes to trade at a discount to AMC, but that may no longer be the case. Now, the street goes on to say why the arbitrage play isn't an easy winner. There's every indication that soon the ape units will convert into AMC common stock. If it were to happen now when AMC is priced around $4, that will represent a gain of about $2.30 for ape holders, roughly 140%. However, the arbitrage trade between AMC and Ape has so far shown that things are not as simple as they seem. AMC behaves like a meme stock, driven by speculation and not behaving as the market expects. This is because its high volatility often has a low correlation to its business fundamentals. Because of its speculative profile, coupled with the challenges AMC faces in keeping its business at healthy financial levels, there is a massive demand to short AMC stock. This is expressed through rising borrow fees for short sellers. These fees are affected largely by supply and demand. AMC's borrow fees currently exceed 300%. This is extremely high and puts intense pressure on short sellers who are losing money to cover their positions. This creates the risk of a short squeeze forming should there be a forward movement in the stock. One of Jones Trading arbitrage trade experts, that's a mouthful, Cabot Henderson recently said that AMC were not such if AMC were not such an unpredictable stock, the arbitrage trade of shorting AMC and going long Ape would be a certain win. Quote, if you can get stable borrow fees, it's a home run, but that's the problem. The real question for ARBs is how to hedge these positions given the potential for a massive short squeeze. And I think that highlights something in and of itself as well. Even if you get stable borrow fees, they go on to say it's a home run. It's not a home run, especially with what we have seen recently. And this article did mention that, and we didn't necessarily cover it. But again, it just pointed to some of the things that made this not such an easy trade when you start to get the courts involved. And I think the recent events like what we're seeing today, AMC disclosing that they're taking stakes in other companies, doesn't show the urgentness that AMC needs to proceed with this capital raising, with this dilution for AMC common stock. So I think there's a lot that's obviously going on with AMC right now, and I think it's ultimately bullish. The more bearish people are, the more priced in it is. This will be a bearish event, April 27th. The more bullish I have to be. There's no other way to put that than that. Now, if we take a quick look back at AMC stock, AMC still up about 6% right here, right now, sitting at $5.56 per share, right on that 100-day moving average. Short interest of free float sitting at 25.15%. It's been very steady, just barely over 25% for the last week or so now. So I do expect a bigger move in the short interest. Wouldn't surprise me to see this go to about 28 to 29% on the next official report that we do get. And it's been pretty constant as well at about 130 million shares that are sold short. The things that keep improving and keep getting better are the cost to borrow rates. And something else that we talked about and we'll probably continue to talk about is the put to call ratio for April 28th. This is something I want to watch very closely to gauge kind of where the sentiment is heading into April 28th. And even after this rally that you have seen over the last hour and a half or so now, the calls open interest for April 28th is sitting at 11.78%. Hasn't even moved today. Puts open interest at 88.22%. So you're seeing 9 puts for every 1 call still on April 28th. I don't think that ratio is appropriate given the risks that maybe there will be another court date. Maybe the judge does not agree to the settlement, and maybe there's even another vote. I think any of those outcomes are bullish for AMC. Now, if we take a look at the Stocko tracker data as well, let's see if we can get a refresher here, and we do. So for this Friday, you're looking at calls in the money, now higher than calls out of the money after this 40+% rally that we have seen over the last 3 days. In the money calls sitting at about 78 1,601 contracts. Out the money calls sitting at 75,000. In the money puts at 13,000, and out of the money puts at 125,000. So this week is looking pretty dang bullish. Next week has a lot of option activity as well, and some of those low put to call ratios that we're seeing every single day now are being concentrated on that April 21st option expiration, where you have about 77,000 calls in the money, 338,000 calls out of the money. In the money puts at 190,000, and out of the money puts at 606,000. So you're going to get a lot of option activity next week, and the option activity for this week is looking pretty bullish so far, considering, again, we have been rallying ever since Monday, right? So not a huge shocker there. So that is what I have for you guys here in this video. Not too much else has actually happened since the last update. Like I said, it's going to be a pretty slow day today. You did have the International Monetary Fund, the IMF, the chief economist warns that banks are in a more precarious situation, creating a downside risk for global growth, and that did come out earlier today. Not something that has really moved the markets all too much. It looks like the VIX is down almost 1%, NASDAQ down about 0.25%, the Dow is up 0.5%, Russell 2000, the outperformer today, up about 1%. So you're getting some back and forth moves here today. Bond yields, though, are going higher heading into tomorrow's CPI report. Not necessarily a good sign, and it's kind of weird when you see bond yields up and stocks up. Typically what we've seen as of the last 3 months or so, bond yields have been falling, leading technology higher. So bond yields are going higher as of the last week or so. Stocks kind of started to move down, but not in the way that you would expect. So if CPI is bad tomorrow, well, that's going to be a big clapping for technology. Could be a very bullish thing for AMC, though. So that is going to do it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.